Exactly 1 year ago today, a Chinese doctor alerted friends about a mystery virus in his hospital. Now, 365 days and more than 1.5 million deaths later, things have gotten somewhat back to normal in China. Plus, it's the penultimate trading day of what has undoubtedly been an unprecedented year. One of the industries hit hardest, well, the airlines. We look ahead to what relief 2021 may bring for them. And finally, 20 states will hike their minimum wage on Friday, but the federal baseline hasn't been increased in more than a decade. I'm MacKenzie Sigalos, and this is CNBC After Hours. Stocks rose with just one trading day left to go before closing the books on 2020. It's our last show of the year today, so here's your look at the top 4 performers in the benchmark S&P 500. Almost all are plays in some way or another on pandemic trends. So staying at home, social distancing, online shopping. You've got online marketplace Etsy, Nvidia, which makes the graphics chips that are so prevalent in the booming video game industry, and contactless payments powerhouse PayPal. And then there's the monster 730% surge for story stock of the year Tesla, which technically counts, but not really, since that stock only joined the S&P this month. The S&P 500, along with the Dow and the Nasdaq, are set to post solid gains after a year that was so fundamentally disrupted by the global COVID pandemic, which officially emerged, at least in one sense, exactly 1 year ago today in central China. CNBC Beijing correspondent Eunice Yoon has the story of the doctor who first flagged the virus and how China is faring now.
1 year after the pandemic hit China, life looks relatively normal. For example, this restaurant is about 50% full after months of struggling to stay in business.
When we got hit with the pandemic, it was totally empty here. Today, we have business. And, you know, we're going to have maybe some challenging times ahead for a little while, but it'll be okay.
Last December 30th, a 34-year-old ophthalmologist from the epicenter of Wuhan posted a message in his WeChat group alerting fellow doctors that a new disease had emerged at his hospital. Dr. Li Wenliang was later silenced by police, caught the virus himself, and then died of what became known worldwide as COVID-19. On New Year's Eve, Wuhan authorities linked the coronavirus to a local seafood market, but insisted it was not spread by humans. Only weeks later did China's equivalent to Dr. Fauci, virologist Zhong Nanshan, acknowledge that the virus did indeed spread human to human. A few days later, the authorities locked down entire cities, including Wuhan. The lockdowns ground business activity to a standstill. But eventually, those measures and tight travel restrictions brought the number of infections way down, and businesses started to reopen. For 2021, China is expected to grow by 8% as people look to spend and travel more, at least domestically. But even here, life is not fully back to the way it used to be. Beijing has had many outbreaks. Some parts of the city have been locked down. There are 20 reported cases, and 1.2 million people have been tested. The government is discouraging people from entering China, requiring a PCR antibody test and a COVID test within 48 hours of boarding a flight, and then up to 3 weeks of quarantine when you get here. And there's still controversy over what happened in Wuhan. A study out by the China CDC showed an antibody prevalence rate of 4.43%, which some experts say suggests 500,000 people in Wuhan were infected or exposed to the virus. And a local journalist was sentenced this week to 4 years in prison for her reporting in Wuhan. As for China's ambitions to develop a homegrown vaccine, state producer Sinopharm said one of its candidates is 79% effective. The results are only interim of a phase 3 trial, but they put China closer to its plan to roll out hundreds of millions of doses worldwide. The plan for China is to move ahead to inoculate 50 million people here by Lunar New Year in February, prioritizing health workers and police. However, the lack of a detailed breakdown of the trial data for the vaccines is feeding concerns about their safety and efficacy.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
We know that the vaccines that are currently authorized in the United States, Moderna and Pfizer, they are more challenging to manufacture. Right now, we cannot supply, the entire global demand for these vaccines, rely only on mRNA vaccines. So I think that the AstraZeneca approval authorization in the UK is a big step forward.
Late last year, we moved to zero commission rates, and I think that removed some of the remaining friction in trading. And then, the volatility that started at the beginning of the pandemic really, I think, drove people into the market. And then, kind of those unique conditions of work from home, everyone spending more time online.
What we're doing is enabling our customers to go further on a single charge. And also, we have the best fast charging capabilities. Today, we're charging large capacity, large commercial vehicle batteries in 30 minutes or less, and we have a glide path to 15 minutes or less.
We look at, say, 2022 as a more normal year. The total attendance based on the traditional curve might be down 15 to 25% on a permanent basis. So that's the way that we're gaming this out permanently.
Now, even though the stock market did pretty well in 2020, all three major averages hit all-time highs, and they will post gains for the year, those numbers obviously don't tell the whole story of what businesses had to face in 2020 as they navigated the coronavirus pandemic, especially the airlines. Travel demand plummeted. Lucrative business travel nearly stopped altogether, and the airline companies were bleeding money. They're still burning cash, but things are starting to turn around. More than 1 million people passed through TSA checkpoints each day for the past 4 consecutive days. That's a long way from the paltry 80,000 people traveling in the middle of April. In 2021, can the airlines really bounce back to where they used to be? CNBC.com airline reporter Leslie Josephs looks ahead to the industry's next 12 months.
So airlines have never faced a crisis like coronavirus. They were just coming off of a decade of profitability, but the coronavirus has turned everything on its head. Airlines are losing money every day. They've taken on tons of debt just to survive, just to pay their employees and keep their operations going. They're on track to lose about $36 billion pre-tax this year. So they've never gone through anything like this. So 2021, airlines hope that things will get better. It's not going to get better immediately. What we know is that the vaccines have created a lot of euphoria around airlines and future travel demand. People are cooped up in their homes. Surveys show that they want to travel, but it doesn't mean that it's going to happen immediately. The same way that we're not all going to get the vaccine immediately. That's rolling out rather slowly, and it'll take a while for everybody to get inoculated. So 2021 is expected to be better than 2020, but that's a really low bar. So that's the issue with airlines, because they already have these shrunken operations, they have smaller workforces, and they're trying as much as they can to trim their cash burn. But it looks like that losing money every day, that might not even stop until the spring, could be even later. So there's a little bit more optimism for the back half of 2021. Maybe people will start to return to air travel, but it doesn't mean that things are going to get back to normal. One thing that airlines have done to help them get through the crisis is something that's going to weigh on them for many years down the road, and that's debt. They have taken on enormous amounts of debt just to survive. These are very capital-intensive businesses. Some have more than 100,000 employees to pay, and of course, these aircraft are very expensive, and they have hundreds of them in their fleet, some of them. Interest expenses have doubled. That is going to weigh on their earnings for the next several years. That's going to limit some of the upside, and analysts have pointed this out. It's not something that they can get out of easily. So even if we do have a travel boom, they're going to have to pay that back. U.S. airlines have a debt load now exceeding $170 billion. So that's something that's going to be not a 2021 problem only. It's going to last for several years, and how much they can generate cash and pay that debt back will dictate what kind of returns they're going to be giving and what their future is.
Okay, time for today's numbers round. We'll start with 2. 2020 was a red-hot market for IPOs, even if some of those newly public companies aren't exactly making any money yet. According to a Reuters analysis, companies that debuted this year that have yet to turn a profit saw their stocks rise twice as high as companies that actually make money. The average performance of all IPOs and direct listings this year, regardless of profit, is a stunning 75% gain. Next, 240. And while we're talking this year in deal making, we can't talk about any effort to raise capital in 2020 without talking SPACs, or special purpose acquisition companies. Now, these blank check corporations exist for the sole purpose of buying a private company. Once the merger goes through, that private company becomes a publicly traded one, but without the scrutiny of all the financial disclosures that come along with an IPO. These used to be looked down upon as a sort of shady backdoor to the public market, but not anymore. These things exploded this year. More than 240 SPACs were introduced in 2020, more than quadruple the number raised in 2019, according to SPAC Insider. And finally, 50. 50% of U.S. states will raise their minimum wage in 2021, and 20 of those 25 states will implement the pay hike on Friday. The federal minimum wage, however, hasn't been increased in more than a decade, but that could change soon. President-elect Joe Biden has pledged to boost it to $15 an hour and completely eliminate the tipped minimum wage, which is the even lower base pay given to employees who make most of their money on tips. So think restaurant servers, bartenders, and other professionals who commonly receive gratuity. Advocates of the wage hike point to the essential role that hourly workers have played in our society during the COVID pandemic, while critics, they say that higher base pay will hurt small business owners. Our newsroom published a big feature on the minimum wage debate earlier today, and you can check that out by going to CNBC.com and downloading the CNBC app. That's it for After Hours. Thanks for watching since we launched in April. We'll be back here in our home office next week to kick off 2021. So have a very happy new year and be sure to catch us then.